Oil prices have now been sideways for more than a year now, and the price has been stabilized. Is it possible that the oil price will now rise? And is it possible that investments into oil stocks might be the next big thing to come? We're going to discuss the pros and cons that speak against or for an investment in oil stocks right after the intro. Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick, and today we're going to be talking about an investment into the oil sector. Moreover, we will be answering the question if an investment in oil stocks is a good thing at the moment or maybe associated with higher risks. Now, I want to answer this question really quickly, especially if you don't have a lot of time. There's lots of volatility associated with oil stocks at the moment, and therefore an investment where you simply buy and hold for multiple years might not be well warranted here. Oil stocks are a good investment, but in the short term, if your span is like 6 months to a year, and in my opinion, it will turn out to be very profitable. But now, let's go into the long form of this to give you the fundamental reasons why I think oil stocks could see a very big rise coming into November of this year, and this trend should persist into the next year as well. I won't be discussing the technical chart of oil per se. With this video, I want to delve deep into the fundamental reasons on why oil prices should rise. However, if you're really interested in the technical aspects of oil, we do cover all of that in our Discord server, and you can join us for free there and ask your questions about inflation, about oil, or any other stock you might be interested in. Just have a chat with us and join our community, and maybe you also like our premium offering. Now let's jump into the reasons why I think that oil stocks are a particularly good investment at that time, or at the time of recording this video. For one, everything has run so far. You have seen AI stocks rise, you have seen the general ETF in the S&P 500 rise, now you see gold rise, you saw Bitcoin rise and Ethereum rise. What hasn't risen so far is the energy sector. The energy sector is now at the point where the mining sector in gold was 2 years ago. It didn't really do anything, and it was the most underinvested sector in the market until it wasn't. Now institutions are investing so much in mining stocks that they have been running and running and running. They're just going higher. And I believe that the energy sector is the sector that will run at the last, and so far the most underinvested sector on the market. Additionally, you always have demand when it comes to oil. Why? Because oil still is a central technology that we need to do anything in the economy so far. It is the raw material that we use for transport, for chemical productions, and even just the production of anything that you would like as a processed product. You will require oil for it. Therefore, the demand is high, and it's a supply and demand situation. Oil is a fossil fuel. The resource is finite, and therefore, if demand is constant, if demand even rises, the price is gonna rise with it as well. Additionally, many of the big oil companies, for instance ExxonMobil, Chevron, and Shell, do pay high dividends. And investors who like a passive income, it just makes sense to invest in these stocks. Furthermore, this will be an additional inflation trade, because anything in inflation, for instance Bitcoin, if you wanted to hedge against inflation, you could hedge against inflation with gold and silver. And what you have seen now is that gold is at all-time highs, silver is near all-time highs and is making new cycle highs, and Bitcoin is at an all-time high, as well as Ethereum as well. It hasn't ended so far, but it seems like if you want to get a cheap entry, you enter into something that hasn't run so far, and that would be the inflation trade in energy. Energy has been down 50% since 2022, and inflation, however, has been creeping up slowly because central banks around the world have been cutting their interest rates, and with the Fed recently announcing interest rate cuts in September, inflation is going to creep up even more. You might not have noticed inflation so much since 2022, but that isn't really the case. Most of the raw materials on the market are actually at all-time highs, but but you don't notice it on the product so far because the oil prices have been falling by 50% since 2022. So that was a suppressing factor on general goods that you need for living that haven't really seen a big price rise since 2022. This is set to change, especially when oil prices are going to rise. Therefore, the inflation trade here, at least in the short term, and I'm speaking about a period of 6 months to a year, is in oil stocks. And if you think inflation is going to go high, then the investment in oil stocks is well merited. Furthermore, there are geopolitical risks still on the horizon. For instance, if you look at Ukraine, there is a potential deal coming up. However, you could go to pressurize the opposing parties by not going the drill baby drill route, but simply go with the drought route where there's no oil on the market. Therefore, oil prices could spike to new highs. Furthermore, oil stocks could be used to diversify your portfolio because if it's too tech heavy, because tech was running really hot, you could get a bigger risk in there because bigger companies in that sector have been running while most of the mid caps and small caps have been left behind. If one wants to hedge their risk, they could allocate their gains from tech stocks to oil stocks as well. Now let's move into the cons. Like, why would a investment in oil stocks not make a lot of sense? Well, in terms of the long-term scenario, I already told you in the beginning of the video that I don't see that as a good investment due to the high volatility. Even if it helps you to the upside, it can also be very negative if prices are falling. Additionally, if parties, for instance, don't get a deal, they could also just change their agenda and go from drill baby drill to even more drill baby drill. So the upside factor where you can have an oil drought could also be exacerbated if even more oil gets flooded on the market. This is a political risk, and therefore it also acts as a pro as well as a con because the risk is simply elevated, and this is what we call the high volatility in this trade. Furthermore, the regulatory environment is changing. China is becoming increasingly green, so is Europe. There's not a lot of countries left on the globe that will still keep high levels of oil consumption aside from the third world countries and of course America. If, for instance, legislation changes, if the people of the country demand something different, like green energy, for instance, or ESG standards that will be set by BlackRock, for instance, then the landscape could change. The demand for oil could dry up. Oil is not a technology you want to be betting on, especially if you have a long time horizon. Therefore, an investment long term wouldn't make a lot of sense here. In my opinion, the move in oil stocks could starting by the end of November because we see the economy going higher and actually expanding a little bit more in the short term. And therefore, it is possible that we will get bigger spikes in oil price coming into 2026, and therefore the risks to the downside are far less than to the upside because at the moment interest rates are going to fall. The Ukraine to Russia conflict seems to be resolving in due time, and therefore it is possible that oil prices might be rising from here. If you like this video, please give us a like and share, and if you learned something new, please subscribe because we make a lot of effort to bring this content to you, and it helps us out a lot for the algorithm to reach even more people. I'm Patrick with Bloomberg Capital. I'll see you next time. Goodbye.